Hey, and welcome to Financial Reaction's $10,000 portfolio. In this series, we are tracking what would happen if we had purchased $10,000 worth of various stocks, index funds, and over the course of time. We divided the portfolios up into different groups. We have dividend aristocrats. Those are stocks that have consistently raised their dividend payment over the last 25 years. Index funds are just what they sound. They're funds based on different indexes. Rec shares, Roundhill, Yeildmax, groups 1 and 2, Defiance, Granite shares, those are all weekly paying dividends. And I'm breaking this up into weeklies and non-weeklies, so I'll do the weeklies next video. We just have some random monthly dividend stocks. How I came up with these was just a simple Google search of quality dividend stocks, and this is what I got returned after about 10 searches. I just took a handful of them. And then this is monthly and quarterly ETFs, exchange traded funds. So let's see where we're at overall. As you can see, we had a huge week last week in the market. Today is Saturday the 18th, so this is as of yesterday, Friday the 17th. And look at that, a one-day change of 16,000. And as you can see, the total portfolio is up only a little under 4. So last week, this was red. But we had the ceasefire in Iran, and the stock market had a huge couple of days. So we'll see what happens with that in the future. So let's get into it. Dividend aristocrats. Let's see what we've got here. This is the overview. It'll give you information if you're interested. This software is called Div Tracker, and they do have a free version where I think it's 20 holdings you can enter. So if you're interested in playing around on your own, you can do that. Also, there are a Div Tracker on the Android app store that I put this entire portfolio in also. And I can do it on my phone. So that's another good one if you like to play with it during the day and you don't have access to a computer. But Dividend Aristocrats, the annual dividend for the portfolio, you can see is 7,000. This one is still down overall. And if you can, on here, you could choose this tab. This will tell you declared and estimated payments. These are the total payments for all the shares you own. This is a quick breakdown of some of the dividend payments and whether they're up or down. I spend most of my time in the portfolio window. You can see you get a chart of your overall. And then here's all the different ones, how much the values are on this page. This is your green-red breakdown. So these are all profitable and these are all at a loss currently. So why? Smucker, Hormel Foods, Clorox. It looks like consumer goods are lagging. Coca-Cola is even down. Caterpillar is the big winner. It hasn't, you see, we still have a whole number. So this one hasn't paid a dividend. There's no reinvestment on this one. So this is all stock price increase. It went from $6.80 to $7.94. So that's why that one's up so much. T. Rowe Price, you can see it has an odd number. Anything with a decimal point after it in the future will probably be ones that have paid, because the odds of it being a whole share are really slim, and I started with whole share numbers to keep track of that. So we can see why this one went up. It went up, it paid $1.30, so that's a nice return, 5.75%. So you can see it's historical payment. And this pays quarterly. And 22, so it looks like it goes up about 3 cents a year for Dividend Aristocrat. They do every year, they increase it, and it looks like they plan on doing it about 3 cents a year. So these are going to be mainly your solid long-term builders where you can actually, reinvest over time, like add shares weekly or monthly, however your pay's working. You could add these to your holdings over time. These are quality stocks, quality companies that have been around for a long time. and they do pay dividends. So that's a good portfolio there. Even though some of these are in the red, we'll have to see if the consumers start making a recovery depending on what's going on in the Middle East. Index funds. This one's in the green and in the green, so that's nice to see. And all but two, and the two that are down are not down a lot. So this is good. Who's our big winner? VTWO, the Vanguard Russell 2000 Index Fund. It paid 26 cents. Has a yield of 1.24, and its payment is quarterly, and it jumps around quite a bit, as you can see. So a lot of this is also going to be on the payout is going to be on the timing. If they've had a large consecutive, because see, they'd announced back here when it was down, but now that it's up here, so some of these it's a matter of timing. So over time, this will be fine. Like I said, we've had some good returns, and we started this beginning of March, so we're only into our second month, and some of these are up 9, 8, 5%. And the lowest winner is Vanguard Real Estate at $344 up, so 3.4%. So these, and that's not a bad return for this short of a period of time. Skipping over the weeklies, we'll go to monthly dividend stocks. You can see the nice rebound in April. And these are mostly winners. We have a few down at the bottom. Let's see. Why are you the winner? 812 to 892. But because we started with so many shares, every time this goes up a little, you're going to see a nice return because you're getting a return on over 1,200 shares. Let's take a look at the dividend, 10 cents. And that's a 15% return. So that's a very nice return for a monthly. As you can see, the 10 cents is it pays 10 cents every month. So that's good to know because that gives you some long-term stability. It looks like they've always paid that 10-cent dividend. And as long as they keep it up, at least it's a steady eddy. You know what you're going to get. And it has a good return on cost. Plus, it's inexpensive, so you can buy more shares. So each month, this number should jump higher because you're going to get a 15%. So you should be able to buy more stocks. Trinity Capital had a good price return. This one had smaller price return, 13 cents, 12%. So let's see if 13 pays 13 a month. So there you go. Anything else jumping out at us? 1060, 746 to 756. So that's 10 cents. Realty. So real estate seems to be holding steady. Even with dividend payments, it's holding its stock price. So that's good. So every month when it pays, is that monthly? Yeah, monthly dividend stocks. Every month it's paying 27 cents, so it's losing that stock price when it pays, and it seems to be recovering its stock price over time. So every month it gets the drop of the dividend payment, it recovers, so that's good to see. And what are the monthly ETFs? This one had a huge recovery jump. And we were green last time, and we're still green because it's only up a little 1,000. The winner is DNL Wisdom Tree Global. It had a 41.38 to 44.38, so it went up. The annual dividend is only 2 cents, so that one is, as you can see, it just 0.05. So this one just didn't pay. It had a bad dividend month. You can see it's normally, wow, there is no normal. It jumps anywhere from 10 cents to 40 cents, 60 cents. So this one's a little Jekyll and Hyde. I'm not exactly sure why it would drop to 2, but that's a bad payment. But it did have a increase in price. This one, here you look at the annual dividends. Let's find a high one. So FEPI, it's $11.35 annual dividend. So it paid 87 cents a share, which is good. That's a 27% yield. That's very good. And it's a little higher than its 3-year average. And we've had $1, 90, 90, 90, 80. So it has curtailed over the last couple of months, but 90 is perfectly in line. 87 is fine. This is one of the more popular index funds, dividend paying index funds. So that's FEPI. JEPQ is another one. SPYI is 51 cents. And that's a monthly payer. And 50 cents seems to be pretty consistent. So some of these you can actually bank on long term. And some of these are Jekyll and Hyde. So that's going to be up to where you are in life and with you and your financial advisor. Don't forget, some of these, if you're going to dividend invest, remember your tax liability. I can't explain that to you because I don't know what state or even country you live in when you're watching this. But this is why there is a financial advisor in your area that offers a free consultation, you should probably go in, see if you can set one up. Make sure your 401k is set up right. If you can get a Roth going, whatever you can do to defer or save on taxes, that's a good thing. And like I said, I've heard on the radio in the local area, some of these guys around here will talk to you. They'll give you like a free consultation if you don't have a large enough portfolio, but they'll give you a few minutes, or somebody in their office will give you a few minutes, kind of give you an overview of what you can do. And remember, if you're dividend investing, there are stock implications if you're not doing this in like a 401 or a Roth. So if you're going to be investing in a regular portfolio, just keep that in mind. I'm going to go ahead and wrap it up. Like I said, I'm trying to keep these a little shorter by going half and half. But hey, thanks for joining me. If you would, like and subscribe if you're still here. Awesome. Thank you so much. And I'll see you in the next video.